Here are the crypto top headlines covered in this video. SEC rumored to be reconsidering spot Ether ETF denial. Next, Cardano could be crypto's next big comeback story as fat whale wallets eye $1 ADA price. Also, Grayscale CEO Michael Sonnenshein steps down. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: SEC rumored to be reconsidering spot Ether ETF denial, says analyst. ETF analysts James Seifert and Eric Balchunas said they had increased their odds of the SEC approving a spot Ether exchange-traded fund from 25% to 75%. Two exchange-traded fund analysts have said they are reevaluating the chances of the United States Securities and Exchange Commission approving a spot Ether exchange-traded fund after hearing chatter about the financial regulator. In a May 20th X post, Bloomberg ETF analyst James Seifert and Eric Balchunas said the SEC might be doing a 180 on their expected denial of spot Ether exchange-traded funds this week. Filings from the regulator, public statements from SEC Chair Gary Gensler, and reports of investigations previously suggested that the Commission may have been preparing to deny spot Ether ETF applications. However, according to Seifert and Balchunas, the two analysts changed their prediction on the odds of spot Ether ETF approval from 25% to 75%. Seifert hinted that the investment vehicle was becoming an increasingly political issue. Never going to hear the end of this from the Ether people in my replies if this turns out to be true, said Seifert. But it's what we're hearing from multiple sources. Should see a bunch of filings over coming days if we're correct. The SEC must decide whether to approve or deny VanEck spot Ether ETF before May 23rd. The Commission has delayed VanEck's application for as long as it is allowed under regulatory guidelines, making it the first in a long line of spot Ether ETFs being considered. ARC21 shares, Hashdex, Invesco Galaxy, BlackRock, and Fidelity are also waiting for a decision from the SEC. In an April 9th interview, VanEck CEO Jan Van Eck said he doubted that the SEC would approve his company's ETF application in May. Asset manager Grayscale withdrew an application for an Ether futures ETF on May 7th, and Michael Sonnenshein announced he would step down as CEO on May 20th. U.S. lawmakers in the House of Representatives and Senate voted in the last 2 weeks to overturn an SEC rule affecting how the regulator treats banks dealing with companies holding assets. It was unclear at the time of publication whether President Joe Biden intended to follow through with his threat to veto the congressional resolution or sign it into law. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Cardano could be crypto's next big comeback story as fat whale wallets eye $1 ADA price. Significant moves by major investors often signal upcoming shifts in the crypto market. Recently, Cardano, or ADA, has caught the attention of these large-scale investors, commonly known as whales. This renewed interest could trigger a substantial comeback for the 10th biggest cryptocurrency. Cardano whales increase holdings. Data from Into the Block shows a significant trend. Cardano whales holding more than 100 million ADA tokens increased their holdings by 11% last month. They now control almost 7% of Cardano's entire supply. This accumulation is typically considered bullish, indicating that these influential investors are adjusting their positions and buying more promising projects. It's not just the whales that are showing confidence in Cardano. Retail investors are also involved in the bullish momentum. More data from Into the Block highlights ADA's positive bid-ask volume imbalance, indicating that buying pressure exceeds selling pressure. Additionally, the in-the-money metric, which measures the profitability of current holders, has flipped positive. Growing confidence in Cardano's ecosystem. Beyond investor sentiment, the overall confidence in the Cardano ecosystem is rising. According to DeFi Llama, the total value locked, or TVL, on Cardano increased more than 5% in the last week. TVL is a critical metric in the DeFi space, reflecting the total value of assets staked or locked in the network's smart contracts. Moreover, Cardano's trading volume has significantly risen. Higher trading volumes generally suggest greater market activity and interest, which may raise prices. Analysts predict a bullish future for Cardano. Several prominent crypto analysts are forecasting a substantial rally for Cardano. An analyst known as World of Charts has noted that ADA's breakout is confirmed and the token is moving accordingly. The analyst expects Cardano to reach $1 in the next few weeks. Similarly, another analyst, Trend Writer, has identified a bullish pattern for Cardano. They noted a jump in ADA's price following a bullish signal on the daily chart and expect ADA to hold above the 50-cent level in the short term. Dan Gambardello, founder of Crypto Capital Venture, also shared his opinion on Cardano's price movements. He pointed out that ADA is exceeding its 20-day moving average, or MA. Gambardello mentioned the formation of a golden cross on Cardano's daily chart, where the 50-day MA crosses above the 200-day MA. The resurgence of whale activity, strong retail investor interest, and growing confidence in Cardano's ecosystem paint a promising picture for ADA. The combination of these factors and bullish predictions from several analysts indicate that Cardano could be on the verge of a significant comeback. Our next top headline: Grayscale CEO Michael Sonnenshein steps down. The CEO will be replaced by Goldman Sachs executive Peter Mintzberg, effective August 15th. Michael Sonnenshein has stepped down from his role as the CEO of Grayscale Investments, LLC. Sonnenshein will be replaced by former Goldman Sachs executive Peter Mintzberg as of August 15th. Until then, Grayscale's Chief Financial Officer, Edward McGee, will lead the firm in the interim as the Principal Executive Officer. Barry Silbert, founder and CEO of Digital Currency Group, the parent company of Grayscale, wrote in a May 20th X post, "As we position Grayscale for its next phase of growth, excited to welcome Peter Mintzberg as Grayscale's CEO effective August 15th. Joining from Goldman Sachs, Peter has 20-plus years of experience across prominent asset managers, including BlackRock, Oppenheimer Funds, and Invesco. Founded in 2013, Grayscale is among the world's most prominent cryptocurrency asset management firms, with over $50 billion worth of assets under management as of September 2021. During his 10 years as CEO, Sonnenshein played a pivotal role in the launch of the first United States spot Bitcoin exchange-traded funds, according to Silbert, who wrote, "Michael guided the firm through exponential growth and oversaw its pivotal role in bringing spot Bitcoin ETFs to market, leading the way for the broader financial industry. We wish him the best in his future endeavors." Grayscale was among the first spot Bitcoin ETF issuers in the United States. Its Grayscale Bitcoin Trust, or GBTC, was converted into an ETF on January 11th, though the fund had previously been operating since 2013. This made it the first publicly traded Bitcoin fund, according to Grayscale. Grayscale's GBTC is the largest ETF by on-chain Bitcoin investments, currently holding over 287,801 BTC, worth $19.3 billion and holding a 34.9% market share. However, Grayscale also requires investors to pay the highest fee, 1.5%, compared to the industry standard of 0.2 to 0.25%. In comparison, BlackRock's iShares ETF is the second largest, holding over 274,000 BTC, worth $18.4 billion, and having a 33.3% market share, according to Dune. Bitcoin ETFs are orange poker chips that may harm on-chain Bitcoin adoption. Despite promising to bring more baby boomers into Bitcoin, spot Bitcoin ETFs could cannibalize on-chain liquidity, according to Jim Bianco, founder of macro research firm Bianco Research. Bianco wrote in a May 19th X post, "Pulling money off-chain into the TradFi world in the form of an orange FOMO poker chip will not get digital assets to the promised land of a new decentralized financial system. If anything, it is getting in the way of this goal. If ETFs continue siphoning on-chain liquidity back into the world of traditional finance, or TradFi, this could challenge Bitcoin's narrative as a decentralized alternative to the legacy fiscal system, according to Bianco. If the goal is to develop a new financial system, an ETF dragging money back into the TradFi world is not getting to that promised land." So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.